Let's get into today's session and let's get started. So, Bitcoin has wiped out nearly half its value from its peak. And we've also, if we move over to currencies, we've seen the yen is strengthening on rate hike bets. And then even when we look at indices, the Dow is caught between Fed optimism and AI driven fear. Now, the market right now feels like a three-way tug of war between central banks, risk sentiment, and investor confidence. And nobody wants to be the one who lets go first. So the real question today is, are we seeing early stages of a new trend or just the calm before the next major move? For those of you who've never attended a session with me, good morning. My name is Francois. I'm the market analyst here at ATFX Africa, and this is your daily market brief. Now, the key theme driving markets right now is monetary policy expectations, weakening institutional demand in crypto, and rising caution in equity markets ahead of major US economic data that is still due later this week. So without further ado, let's get into it and let's get started. And let's start things off today with the Ninja, aka USD JPY. Now, here is a story that is increasingly about diverging central bank expectations. So the Japanese yen has strengthened towards 153 per dollar after speculation that the Bank of Japan could raise interest rates as early as April. Now, a former Bank of Japan board member has suggested that policymakers may now have enough data to justify tightening. That's a significant shift because for years, the yen has been weighed down by ultra loose policy, and now suddenly markets are pricing in the possibility that Japan could begin normalizing rates. So while the Fed is expected to cut rates later this year, at the same time, we've seen the dollar is remaining supported by expectations of key economic data that is due this week. This includes tomorrow's Fed minutes as well as the core PCE index, which is set to be released on Friday. Now, markets are currently pricing in a June rate cut with roughly 2 quarter-point cuts expected this year. So in essence, what does that mean for you as a trader? Well, it means USD JPY is caught in a policy tug of war between a potential tightening Bank of Japan and a potentially easing Federal Reserve. And that's a really powerful driver that we can exploit as traders. If we have a quick little look here at the charts, USD JPY has struggled near resistance here around 154.4 and has since pulled back towards this 152 support level, and is actually, even today, we started the day off strong, but it has pulled back quite significantly, all the way down from about 153.5, currently trading around 152.8. Now, this suggests that resistance is clearly established near this upper zone at the moment, okay? And on the downside, continued yen strength could push the pair lower, especially if markets continue pricing in Bank of Japan tightening. But if the dollar regains strength here from upcoming US economic data, we could see renewed attempts towards that resistance zone. So right now, momentum appears relatively cautious, but with a slight tilt towards yen strength. Now, with that being said, if we drop this down to like a 15-minute time frame, you can see here that USD JPY has been on a lower time frame, relatively consistent within this range here. And we've been here now for quite a few days since last week, Wednesday. I think actually last week, Wednesday. So there's been quite a numerous amount of short scalp trading opportunities, some nice intraday opportunities here, just bouncing in between this actual zone. If you are waiting for a larger move, I would wait for either a break above 144.6 or a break below 152. But if we do see nice, clear price action, like how we saw here, markets went up, came back down, you see some proper rejection, that is a really good entry from a price action perspective. And currently we can see markets are still trading within that range. So especially because we are awaiting more economic data tomorrow, chances are today we will probably see this trend just continue in the sideways market, where it'll most probably push down here to 152.5, maybe even this 152.4 level, show some nice rejection, and then we could see some upside momentum again back to that level at a 153 point, let's call it 0.7. So definitely some opportunities there from an intraday scalp trading perspective. Obviously, as I said, from a larger trading perspective, we'll have to wait for some clear breaks above either one of those support and resistance levels. If you are seeing something different, please feel free to pop it for me into the comment section. I'll be happy to look at that for you. I just want to see here, I've got a message from Steven saying, good morning, Franco. Morning, Steven. And I've got a similar message from Robert. Thank you so much, gents. I do see we've have more people here already. So again, I'm just going to repeat what I said in the beginning as well, which is basically just that this session here today is for you. So this is your opportunity to, for lack of a better word, pick my brain. Okay. This is your opportunity to ask me questions that you are struggling with. This is your opportunity to get a second opinion on a trade setup that you might be waiting or lying in wait for. Okay. Again, as stated, I'm not going to be providing financial advice, but I will provide you with my input. Okay. That being said, let's move over. Done with the currency for today. Next up is our cryptocurrency of the day. So let's talk a little bit about Bitcoin. And this is where things start getting really interesting. Now, Bitcoin is currently trading around $68,000 a coin. We kind of have to look at the bigger picture first before zooming in more on the specific cryptocurrency. So over the past 4 weeks, Bitcoin has fallen more than 27%. And over the past year, it's down nearly 30%. And this is primarily because the fact that institutional demand continues to weaken, with Bitcoin ETFs recording a 4 consecutive week of outflows, which exceeded $359 million withdrawn just last week alone. And here's the key driver behind that shift: expectation, specifically expectations around US monetary policy. So markets have been reacting to concerns that the newly nominated Fed chair, Kevin Warsh, could maintain tighter monetary conditions than previously expected. And tighter monetary conditions are typically very negative for speculative assets like crypto. Now, at the same time, broader risk aversion has pushed investors towards traditional safe havens like gold or silver, while volatility in tech stocks even has spilled over into the crypto market. There has been multiple concerns about AI and all this type of stuff, and that entire narrative has kind of spilled over into the crypto market. So Bitcoin right now is relative in consolidation mode, waiting for that next catalyst. So from a technical point of view, it is providing a lot of day trading opportunities for us right now. And let's explore some of those by having a quick glance at our charts. Technically, Bitcoin has been trading sideways, as you can see on your chart moment, in that defined range between roughly 70,000 to about 64,000, showing no clear directional bias. And this suggests indecision. Now, the market would have to regain that resistance around $80,000 a coin in order for bullish momentum to return. So for now, momentum has slowed and the market is waiting for clarity. which could likely come from the upcoming Fed data, especially the PCE index and the Fed minutes. Now, until that catalyst arrives, Bitcoin may remain relatively range bound as everyone kind of sits and waits for either a breakout or further downside continuation. Now, that kind of provides us with some great intraday trading opportunities. Bitcoin has been sitting below this 50% Fibonacci level, which is around that 71,000 mark. And has kind of, as I said, just been trading between that and here at the bottom at 64. So if we have a look and we pop in a range even here, like I said, for now, the chances of us remaining range bound is relatively good at this specific point in stage. And I mean, we've been range bound now for the majority of this month. So all we need to look out for now is, okay, so we've rejected the top. There's been a nice clear break of structure and we are now moving further down. Now, even on an intraday perspective, we have now broken below this midpoint, which is suggesting further low downside momentum. So even here, this could be a relatively nice little short setup with just aiming for that bottom of the channel. And that's a decent 1 to 2 risk to reward ratio on just a little setup here on Bitcoin at the moment. Or alternatively, you can wait for this to go all the way to the bottom. You can wait for a clear rejection like this and then have a look at some long positions back here. Obviously, back up to those high points. You can have relatively tight stop losses on this, which will give you a 1 to 4 risk to reward ratio. And again, just using very basic price action to get you that entry using our smart money concepts. If you don't know how smart money concepts work, please have a look on our YouTube channel. There's a lot of videos of me explaining this. And here you can see just easy setups while it's range bound. Obviously, please remember that you need to wait for confirmation here at the top before getting into buys. Don't just place a buy limit here and then the market continues on its merry way down and then you're on the wrong side of the trade. So you want to see like here where it pushes in, rejects back up, and then shows that clear change of character, break of structure, and then that move higher from there on forward. If there's any questions on what I've just discussed or showed here, please let me know in the comments. I would love to hear from you guys. If you have any comments on something I've discussed up until this point, whether it be currencies, etc. Also, please feel free to ask. It's exactly what I'm here for and what I am here to help with for each one of you. If you have any comments on the analysis that I provided, also please pop that for me into the comments section. I would love to hear from you guys. If not, let's move over to our final instrument for today, which is the Dow Jones Industrial Average, also known as US 30. So when we look at this index, we are seeing a market balancing optimism and caution. The Dow is currently trading around 49,400, 49,500, that range. It is up slightly on the day, but broader sentiment here remains fragile. Last week, we saw the Dow fell over 1.2% alongside declines in S&P and NASDAQ. Now, two key factors are driving this specific move. First, rising concerns about AI disruption, something we just spoke about in cryptocurrencies as well. As I said, affecting a lot of markets right now. And this is across traditional industries, particularly software and technology. Then secondly, investor caution ahead of major economic data releases this week. So at the same time as well, expectations for Fed rate cuts later this year are providing some underlying support. So equities at this point in stage are stuck between optimism about future easing and fear about structural disruption and economic uncertainty. Now, if we have a look at our chart here at the moment, you can see we have been relatively trading in this ascending channel for quite some time now. Last week we spoke, we were right here at the top of the channel. I said if we get a nice little rejection here, we'll push down to the bottom of the channel. So that setup played out beautifully and absolutely loving it from there on forward. Now, looking at the chart at the moment, it's consolidating just under that 50,000 psychological level. Now, this will remain a key resistance zone. And on the downside, we can obviously see there's a relative amount of support from our EMAs, which is our dynamic support at the moment, plus the ascending channel. And if we have a look at the range we are trading at, we can also see that momentum is relatively neutral right now. So markets are waiting for that confirmation from economic data before committing to a directional move. Now, when markets lie in wait like this provides intraday trading opportunities for all the short-term traders out there like me. Now, here we can see Friday, we got this nice big rejection. Markets tried to push higher, couldn't really break through, came back down, and is now trying a bit of a rebound from here. So you have two options here at the moment. Either we can look for some upside trades here from where we are at the moment. If you want to get a bit of a tighter entry, maybe a bit of a tighter stop loss, then aiming for that high point, which will give you about a 2 to 2.5 risk to reward ratio on this one. Alternatively, you can wait for a break above and a nice clear break of structure around that 49,800 level, which would decrease your risk to reward to about 1 to 1. But there is a certain element of safety that gets added to that setup. Again, just providing you with various options and different insights with regards to what's going on in the market, not telling you what to do, not telling you what type of trade to enter, just giving you, from a price action perspective, some options to look at. So again, like I said, some upside momentum from there. Or if you want to look here, this one obviously here at the bottom does have a certain additional element of risk because there is the factor that markets could just push down, break out of the channel, and then push lower from there, as we are at a relatively high point, as you can see here looking at the daily. So even if markets just look to retrace back to the 100-day EMA, we're looking for a retracement close to this 48,000 level. So that's about 1,500 points from where we are currently sitting. So there is definitely an opportunity for some downside momentum. But as long as we are staying within this channel, there are some intraday trade opportunities that we can capitalize on. Perfect. So, traders, as we are heading into today's trading session, the big question we need to be asking ourselves right now is, first of all, tomorrow we have the Fed minutes that is being released tomorrow evening around 9ish. And the question to ask is, what happens when the Fed minutes get released, and what tone does that set for the rest of this month or even going into next month? Because the fact that those Fed minutes will reflect either a hawkish or dovish tone. And also on Friday, we're going to see US GDP. We're going to see core PCE data. Now, do these confirm what we are expecting at the moment regarding rate cuts? Or is there some contradiction that's going to start taking place? Because that could be the catalyst that determines the next major move, not just for the dollar, but for cryptos, for equities, for commodities, and global risk sentiment. So looking at the pairs we discussed today, will Bitcoin, for instance, will Bitcoin break out or consolidate based on the data that we are receiving? Will USD JPY continue its downside shift, or um, will Bank of Japan tightening expectations fade away and markets return to some higher points that we have seen recently? And equities, will the Dow reclaim bullish momentum? If it does on a short-term time frame, it's some nice setup spending for us at the moment. Or will there be additional pressure to push it further down? Now, the only way to answer these questions is to watch the market relatively closely, monitor your price action, have a look for those breakout zones. So have a look for those specific change of character, slight bit of a retest, break of structure that will provide you with those entries. That you can then capitalize on from there on forward. Remember, as a trader, it's not our job to necessarily predict long-term setups. We are short-term, we capitalize on short-term movements. So we need to kind of react on what is happening within the market at any point in stage. And the better we get at that, the better our trading will look. I do see I have a question here. So can you please look at gold? Of course I can. Uh, I've already had two really nice setups on gold today, which played out so nicely. So I'm so happy about that. And yeah, let me show you all that here real quick. So there we go. Okay, so okay, I'm on a very low time frame. I primarily trade gold on like a 1 minute time frame where I look for entries. And the primary reason for that is if we have a look at some of the higher time frames, you can see that gold has relatively calmed down over the last couple of weeks. Again, trading in this relative range. So again, as a short-term trader, we can look to capitalize on that. So earlier this morning, we saw this nice little push down, nice little rejection, previous low from last week. And that was kind of exactly what I was waiting for. So on some lower time frames, that allowed me to start capitalizing on this move here. And this is kind of exactly what you guys need to start looking out for as well, is when you see markets retracing on higher time frames to lower levels where it has previously shot up on the small time frames, 5 minute, 1 minute, all of those, you can really capitalize on this and really get some good moves on that. For instance, let me show you some examples here. So here was a very simple one. I mean, we had this nice little uptrend. We had this clear move higher, nice break of structure, came back for a retest to the smaller support zone. And I just entered there again. Decent risk management. So just a stop loss below previous bottom and a simple 1-to-1 risk to reward ratio on that. It was actually a little bit more. It's about 1 to 1.5. And here you can see markets came back down. First, I was quite happy initially. Markets just shot up, and I was like, "Yay, I'm in profit!" And markets retraced relatively quickly, making me not be so happy anymore. But played out relatively nicely, hit TP, and I mean, even on this, I did a session literally a week ago on retracement strategy, explaining exactly what I'm doing here on a 1 minute time frame. So now again, we are seeing this retracement down, nice little bounce here. And all we need to do right now is just capitalize on small moves. So there's good rejection here. So if it breaks up a little bit higher, even on the lower time frame, there could be some nice little setups. Again, you can have a relatively tight stop loss. If you want to use that low as your stop, you can. That would provide you with some nice setups for a 1-to-1, maybe even a 1-to-2, depending on how your risk management strategy looks. And you can kind of look for setups in that format from there on forward. Now, again, not really looking at any long-term changes right now. There is a possibility that obviously for today, we can maybe go back for a retest here around this, let's call it 5,000 level, from where we can see either markets retrace lower, um, or go back higher for an additional retest higher. Now, again, if you are trading on a 1 minute time frame, it's always good to have a look at what is happening on slightly higher time frames as well. For instance, we can see here at the moment there is this relative amount of resistance that is sitting right over here. So when we are looking for setups, and you can see here markets literally went oops, came back down. So if market structure breaks a little bit higher now, it hasn't yet. So you can see here in the last 3 minutes retraced. So aiming for something much higher than that resistance zone right now, not really feasible because the fact that we can clearly see there's a lot of resistance. But if the market breaks out above that, this becomes a really big support because you can see here, this was literally a level from where markets previously passed and pushed back quite nicely higher. We can also see that markets on the lower time frame have been forming these lower highs the entire time, and this could be a new lower high, which then means markets could be aiming for to form a new lower low. Again, just looking at your price action then. So here we can see now on this specific time frame, we can see here change of character has appeared, markets are pushing down. So now what we are waiting for again, like I said, job is to react. So if markets continue, here's that little break of structure that has now appeared after the change of character. Would like to see it just close down a little bit lower. And that could actually set you up here for a nice little short position even. Again, you can depend on how tight you want to make your risk management, either putting it around this 4,924 level, or maybe if you wanted something a little bit bigger, around that 4,927 level, 29 level. And then you can look for your targets on the lower time frames. I guess I'm normally just aiming for 1-to-1, especially here. If you look at this 1-to-1, kind of lines up with these bottoms over here. So again, there's a fair chance that markets will start bouncing a little bit there, which could come take you out at entry. So you want to start taking money off the table as quick as possible. But yeah, for now, I think gold is trading in a relative range. And it's just kind of for us to capitalize on that smaller moves within that range. So traders, I think that kind of wraps up our session for today. As always, thank you so much for joining me. I love having you guys with me. And I do hope you learned something today and that you've gained some insight into maybe something that you were looking at. So with that, we wrap up your daily market brief brought to you by ATFX Africa, the broker that gives you an edge in today's markets. If you're not trading with ATFX yet, simply head over to atfx.com and go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.